You have saved for a down payment, but what if I told you that is just the beginning? The cost of buying a home in San Diego includes a series of hidden fees, upfront expenses, and ongoing costs that can add up fast. And if you don't budget for these, you could be in for a big surprise at closing. But the good news is, in this video, I'm going to break down every single expense from down payment to closing costs, from property taxes to monthly bills, so that way you walk into your home purchase prepared and stress-free. What's going on? I'm Spade with Keller Williams Realty. If you want expert insights on buying a home here in San Diego, whether it's your first home or you're moving up, hit that subscribe button, tap that notification bell so you don't miss a thing. And if you prefer one-on-one contact or a chit-chat, my contact info is below in the description. You can always call, text, email, book a call with me anytime. All right, most buyers hear the word down payment and think, okay, I got it. I just need to save that amount and I'm good. Well, wrong. That's just the first piece of the puzzle. There are upfront costs before you even get to the closing table. There are fees at closing, and there are fees that are ongoing expenses once you own the home. And today I'll walk you through each one of those so you can budget like a pro and avoid costly surprises. All right, let's talk about the down payment and what you really need. Now, conventional loans are anywhere from 3 to 20%. Those are most common. FHA loans are great for people with lower credit scores. That's about 3.5%, and 0% down for VA military buyers or veterans. Now, if you're looking at a home for $800,000, your down payment could range as low as $24,000 up to $160,000. Now, the good news is you don't need to have 20%, but some loans let you put less down, but that may mean paying private mortgage insurance, or what we call PMI in the industry, which just adds an extra cost to your monthly payments. You just have to check with your lender. Now, how do you figure out what the best loan is for you? You need to sit down with the lender before you go and buy a home. That way, you know exactly what you're going to pay. The lender will give you a budget, and you'll know approximately at a specific budget that you can afford X, whatever X is. This makes things easier when you head out to go shopping. All right, here's a pro tip. If you are selling your home and buying a new one, you can roll over the equity from the existing home instead of coming up with fresh cash for a down payment. Now, don't forget, when you buy, you can also get gift funds from your family, and down payment assistance programs are available. So all we have to do is do a little bit of research, and I can help you with trying to research those down payment and closing cost assistance programs. And speaking of closing costs, let's break those down. Closing costs, those are kind of the hidden expenses. So closing costs are one of the most overlooked expenses, and they typically range anywhere from 2 to 3% of the home price. That means at our $800,000 example, you'll owe anywhere from $16,000 to $24,000 just to finalize the deal. All right, let's break it down and see where all that money goes. Now, the first thing is lender fees, loan origination, underwriting, and application fees. Those fees are typically 1% of the overall value of the loan. Title insurance. It protects your interest in the ownership disputes. Some clients ask me if this is optional. The answer is no. The title insurance company settles any disputes up to the close of escrow if there was something overlooked in the distribution of funds after the close of escrow. Escrow fees. These are the cost of the neutral third party handling the transaction. Now, this fee varies depending on the escrow company, and I am going to go out on a limb here and say that most escrow companies are pretty competitive, but some are more expensive than others. Your appraisal and inspection can range anywhere from $500 to $2,500 combined. Now, these fees you pay upfront, and you will pay your lender for the appraisal. They will put it in the system, and the appraiser will be paid after the work is complete. An appraiser is when a non-interested party in the contract comes into the home, places value to protect the bank's investment, and the appraiser will make sure that you are not overpaying for the home and that you are not getting ripped off. Now, the home inspector is important, and you will pay them directly. The fee for the home inspection varies depending on how many inspections you get on the home. Now, I've had some clients spend as little as $600 and some spend as much as $2,500. It's just totally up to you. Also, I want you to keep in mind these two inspections you will not recoup if you cancel the escrows. These two fees are non-refundable. Prepaid property taxes and homeowners insurance, often required at the closing. Let me give you an example. One of my clients thought they only needed their down payment until we got to the final numbers, and they realized that the closing costs added another $20K. Luckily, I was able to negotiate seller concessions where the seller helped cover some of the costs. Now, always ask your agent about this option because sometimes it is an option. Also, keep in mind, before we go look at homes, you are required in California to sign a buyer representation agreement. That agreement states that if the seller is unable or unwilling to pay my fee as your agent, then you are responsible for paying that fee that we have negotiated. We will talk more about that in our consultation, but commissions are always negotiable. Upfront costs even before you close. Now, before you even get to the closing table, there are a few must-pay costs before we have to close that you need to budget for. The first one is the earnest money deposit, which is anywhere from 1 to 3% of the purchase price. We talked about the home inspection. That's anywhere from $600 to $2,500, and the appraisal anywhere from $500 to $800. The good news, your earnest money goes towards your closing costs or your down payment, so it's not lost money, it's just an early payment. Now, let's talk some monthly costs, what you're going to pay after you own. Even after closing, there are ongoing costs. So you have your mortgage payment, principal, and interest. You're also going to have your property taxes, which is about 1.25% of the value of the home, and that can go up based on the tax cycle. Your homeowner's insurance is anywhere from $1,200 to $1,800. Again, that number can go up. HOA fees, if they apply, anywhere from $300 to $500 a month, depending on the community. And yes, there could be increases in the fees and special assessments. So it's super important to read HOA docs, minutes, the budgets. We can talk more about that once we get there. Utilities, water, gas, electricity, internet, trash, all those things you have to budget for. And let's not forget about the oh crap fund. Here's something no one tells you about owning a home: unexpected repairs. A good rule of thumb, budget 1% of your home's value per year for maintenance. So for example, at $800,000, it would be $8,000 a year in potential repairs. Let me give you a real world example. I had a client buy a gorgeous home in San Diego, but within 3 months, the water heater broke and the roof needed a minor repair. That was an investment of $6,000. Completely unexpected, right? So if you're a first-time home buyer, make sure you have a financial cushion for these surprises. Now, yes, we are going to negotiate that you get a home warranty plan, and that will cover most of the items that usually break in the first year. But remember, that home warranty plan only lasts for 1 year. So what do you think? Were there any costs surprising you? Drop a comment below and let me know what caught you off guard. And if you are thinking about buying a home in San Diego, let's make a plan now so you know what to expect. Hit the subscribe button, give me a like on this video, and I'll see you on the next one.